Welcome back. This is my week in review. Sorry I missed it last week. I was kind of busy with some stuff, so I'll just do a recap of the last 2 weeks, I guess. Let's get into it. What's going on? The market's been going up pretty nicely recently. There's a lot of froth in the market. I think it's due for a correction soon, but I'll take it. Looking back at the 3-month chart, I mean, I was down as far as to 872 back in August 7th, and then it dropped again here to 32,565, and I haven't really added any money to this account for quite a while, but with the market going up, things are up past 40,000, which is good. It's been that way for quite a while, so hopefully that I can stick with that. Let's go back at the end of September. What I had going, I had this NVIDIA call, which I rolled, and also had an NVIDIA put, which I rolled. It cost me $2 to roll these out. So going into October, this call here was assigned this first line. So I collected 125 premium there. Shares were called away at my cost basis. They were called away at my cost. So no loss there, and I made some premium. And then this other NVIDIA put, I had done a buy to close. It seemed like the market was maybe starting to go against me. I got a little nervous because I was using margin for this, and I didn't want to be stuck with margin. So I paid 28 to buy this back. Still made 57, so I was out of that trade. This AI stock, man, it's been quite a dog. I've been holding this for a long time, but was able to collect a little bit of premium on there because the market had gone up, so the premiums were looking okay. My cost here is $31.70. It's kind of hard to get any premium if I was trying to sell a call just for a week out like I like to do. There's definitely no premium at the 31 at my cost. Actually, there's like a little bit right there. I don't know why, but for the most part, there's no premium. If I go out a couple of weeks, maybe there's some premium, but I would have to risk going below my strike price, or below my cost as a strike price, which actually, the strike price was 30 here, it was a little bit under, but I was able to collect $24 premium, and that looked like it was, I could buy, I had 2 contracts here, so I bought that back for $1 each just to get out of it. I had a lot of time left. I didn't want to sit there and wait. So hold on to this, wait for it to come up, and hopefully get some premium. Maybe sell it when it starts to get past my cost. So then I did another NVIDIA trade here, expiring 10/25, and the strike price is 130. It's a put. This is in process. I collected 112 for that, and then I did my first in the money covered call on SOXL. I can explain what that is. Usually when you do a covered call, you've got 100 shares, and then you go trade, sell, call, and usually you want to go out of the money at a higher price so you can collect a little bit of difference, and the higher you go, the less premium you make. So, like I said before, the market's a little frothy. It seems kind of like high right now. Things are pretty high. SOXL with the SMCI and stuff going down has gone down a little bit, so it looks a little bit better to trade, get some premium. But I did it in the money covered call, so I picked these up for 35.22, I think. You can see here 35.22. Then what I did is I went ahead and sold a call. Let's see what's the expiration. 10/25, so a week out, and I did it in the money at 33, so that's below, but the premium's pretty high. So the way that works is you're giving up the amount or the appreciation. You're actually giving up what you bought them for, 35.22, and letting them go for 33, but the premium collected covers that. So the difference is, let's see, my cost $35.22. If I let these go at 33, That's 222 that I'd be down, but I made, going back here at the time, 320 as a premium. So I got my cost here pretty much as 222. That's the difference between the strike and my cost. So that worked out to be $98. So I collected $98, and what that does is, since the market's a little frothy, it gives me room for it to go down and not lose any money. I don't really lose any money until I go, well below this. So yeah, that's my first in the money covered call. We'll see how that pans out. I'll keep you posted on the next video. I'm still waiting for my AMZY dividends to come in. That's going to be announced on the 23rd. So next week we'll be paying that out. Hopefully it's a large amount here. NVDY, like I said the week before, collected 243, and then I dumped it. I'm going to dump AMZ2 probably. These yield max funds just don't do very well as far as NAV erosion. So I got some JEPQ and some other premiums. I'm playing around with a small amount of shares on these other high income ETFs. I've actually bought a couple more and just kind of tracking them, seeing how they work, and seeing what the pay rate is, and seeing if the NAV erodes. So like this SPY-I, cost is 52, it's up to 51.90, so down a little bit, down like 20 cents for that. I've got 2 shares. Let's look back over a year. It's actually gone up, so the NAV on this doesn't seem to erode. It's just down a little bit right now. Let's look at some others. Let's look at XDTE, QDTE, RDTE, the Roundhill funds. Going back a year, the NAV has held pretty steady here. My average cost is 51.37. Right now it's trading 52.80. So I'm up a little bit on 3 shares. These pay out weekly. So the dividend here, 70. Let's see, when's my first dividend? 61, September. Next week, 58. Next week, 70. Next week, 862. And then this week, 67. So the payout's really good for just 3 shares. What's that? 22 cents or 21 cents. So these don't pay out like as good as Yield Max, but Yield Max has the NAV erosion, so it just kind of sucks away your ability to produce income later. Looking at QDTE, same thing. My average cost is 41.56. It's up to 42.60. So I'm up there. Had this on a while. Dividend 67, 136, 79, 68, 84, and then $1. This one pays pretty well. So let's see how many shares I got there. I'm up to 3 shares. RDTE, this is a newer one. Looks like it's just jumped up recently. My average cost is 44.25, and now it's trading at 44.82. So no NAV erosion there. This one's new. I don't have much of a dividend to show, but I did get one for 125 on 4 shares. There's some others in here I'm playing with and researching, and I'm going to make a move here where I dump a bunch of cash in here and just let it produce income over and over without me having to do anything. I'm just trying to determine which is the best one. In other news, I'm looking at some scenarios with this spreadsheet on the big 3 that have daily options: SPY, QQQ, and IWM. I'm doing a couple different scenarios on SPY. Most of these are one day to expiration in the money. This one is a SPY with a delta of 20, just doing straight up covered calls, cash curd puts, and doing the wheel. And I know I could back test this and grab data and put it in a sheet, but I like to enter these every day though, and keep my pulse on the market and know what's going on. So basically how this is working is for like 10/18 yesterday, the start price was 583. I did a put, and the strike price is 582, which is a 20 delta. I'm keeping all these deltas right at 20, which is very safe, and doing 2 contracts. Premium collected was 40, so times 2 is 80. This is in process. and this would require $116,400 in capital. And I've got that condo for sale, and hopefully I'll have between $200,000 and $300,000 to play with in this account. So I'm kind of just seeing what the best option for me is here to generate income and do it in a safe way. This is probably the safest at 20 delta. You can see in the past few weeks I really haven't been assigned. I was assigned a couple times up here back in September, but all these other days it's all been puts, and I haven't really been assigned. If I do get assigned, I just turn around and sell it at my costs. If I did 2 contracts at right now 578, this would be 115,600 that I would need to do this strategy. And you can see over here, 224 per week, 776, 648, 1,050, 830, 476. So I think it averages out at about 650 a week for doing this, and it's very safe. Of course, it's not as much as when you do in the money covered calls. Let's look at that. So SPY, 1 day in the money. I kind of trade these off with like this code here for A and B. So like this one was a put. The start price is 581. So in the money would be 582. Let's look at that. SPY. Sell a put. Let's say I'll do 1 day later. Let's say the price is at 584. I just go up in the money one, and the delta is going to be around 50, and I can collect a good amount of premium there. That's kind of why I'm doing this. And I do this on SPY because in general it just goes up over time. Plus it's safe because it's an ETF of the top 500 S&P companies, and so if any one company tanks, it's not going to drag the whole thing down. There's less of a risk to lose my capital. So this one started at 581, and then I just did it in the money, put it 582, just $1. All these deltas are going to be around 50% because it's at the money. 2 contracts, premium collected 153 that day. So the total with 2 contracts is 306, and I would need 116,400. So if I did 4 contracts, of course that just increases it. I would need 232. If I had 232, I don't know that I would put it all in there. I'd probably put some in a Vanguard fund or something. So just being kind of conservative here. So the trades I have going now started on 10/18 and expires 10/21. So if this goes, is assigned or whatever, I'm kind of trading off days. So the next day would be A. This B would turn into a call. I wouldn't do it on this next A. I would do a regular put here, and then I would do a call for this day on 10/22, expiring 10/23 at my cost. So looking at this in the past few weeks, this is way more money. 1,082 per week, 38.44 per week, 1998 per week, 3,016 per week, 2262, and 1704. So this is a good strategy for SPY. SPY is expensive though, requires a lot of capital. Let's try QQQ, doing the same thing. I've collected, if I look at 10/4 to 10/11, total there's 5,324, and this last week 2356. IWM was the Russell 2000 ETF, 3324, and this is a lot cheaper. I'm doing 4 contracts here and only need like $88,000 in capital. So this is a great way compared to SPY. I need all this capital to make roughly the same amount of money. But IWM, way less capital. I could do actually maybe 6 contracts here and come up with about in the 100,000 area. So let's look at that. 6 contracts be 132. If I did 5, that would be 110. So 5 contracts. Let's do it all the way through. That would be $32.70 per week. Compare that to SPY, 2 contracts with the same amount of capital roughly. It's about the same amount of capital and making $32.70 per week. So just playing around with these things. TQQQ is to weekly. So I'm doing in the money puts. You can see here, start price 74.74, just went up to 75. It's a 51 delta. Collected, or I would collect 177 for 4 contracts, is 708. So far this month, 23.56 per month. I'm doing this on NVIDIA too. Last month would have been 5988. This month would have, so far, 44.24. And messing around with PLTR a little bit, but I don't pay attention to too much of that. I think that's a bubble. It's way overpriced. So yeah, experimenting with lots of different scenarios on what to do and trying to keep my pulse on the market going by just every day looking at these trades and seeing what would happen if I had a little more capital, and gearing up to and just practicing for when I do have the capital to make some money and make some real money and maybe retire. So, and that's it for this week. I hope you got some value out of this video. If you did, please hit the like and subscribe to the channel. It really helps me out a lot. If you want to see something, put it in the comments. It lets me know, what you want to see, and I'd be happy to try and make a video on that. Until next time, we'll see you later.